Banks are coming for the boomers' money. Boomers, baby boomers, right? They own 85 to 95, arguably, percentage of the purchasing power of most economies around the world. That's not going to change for another 15 to 25 years if longevity in medicine does its thing.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, we have a monumental amount of documents and things that I want to talk about today via an in-depth institutionalized perspective, some things that I think need to be brought up as we head into 2024 surrounding the cryptocurrency and digital asset space. So with that being said, if you enjoy these video breakdowns, smash that thumbs up button and subscribe. We do appreciate the love and support. The first document I want to take your attention to today is just a revisit back to the previous document that we had covered in the video breakdown before this one. One little tiny subsection of this, though, goes on to mention, I have highlighted here, that the cryptocurrency markets will correct simultaneously and not revisit these lows again for the remainder of 2024, nor in the next bear market cycle in 2026 and beyond. Now, I want to talk about this real quick. I'm going to play a video clip for you guys in just 1 second, and I want you all to listen to what these industry-leading experts have to say, one gentleman being an individual from Medico, a Ripple-acquired digital asset company that talks about this in particular. And what I want you all to really understand is that the digital asset prices that we're seeing today are subsequent to the levels that they were at back in 2020. Now, after this next bull market cycle, if institutions really do onboard themselves, what we have to understand is that institutions are not really jumping in this market to day trade this market. They're not jumping in this space to buy up these digital assets at these historically low prices and then dump on manual retail traders in the near future because they experienced a couple, 100x price appreciation gains in their portfolio. These large institutions, they know the long-term potential of this digital asset space, and they also know that once one financial institution gets the green light, a vast majority of financial institutions, hedge funds, and asset managers are going to follow right behind them. So just take that into consideration as we move forward into 2024 and beyond. Now, listen to what these gentlemen have to say, just backing up what it is that I'm saying, that these financial institutions are not here to day trade these digital assets like manual retail investors or smaller asset managers or hedge funds.
Okay, fine, both. So when you structure your investments, right? So this is very important, okay? Equity, when a VC invests in equity, that's not very liquid. You have to hold on to it and either sell it to a secondary or wait for an exit. But the beauty of tokens is that they are liquid, right? You can make an investment in an early stage company, pump that token price up, and then dump it on gullible retail investors and make a massive return, right? So why do you guys even bother entertaining the idea of equity? Why not just go for tokens? How do you choose how to structure your investments? Who wants to?
So we're very long-term investors. So the idea is that we're going in to help build a product or an ecosystem or a service that changes the way we do things fundamentally, and that does not happen through a flip. So I mean, we've done 1,000x in investments, but we're still holding. And so if you actually believe in the long-term opportunity here, you buy and you hold and you support the companies as they build.
The point is that I think that's the beauty of the institutions as customer. The institutions will not do heavily day, seconds trading, whatever. They will rather go for investment and have the positions longer. So all the banks, and I think this is the first step they already committed and already had done already, or being in the near the finishing line of having the custody integrated, that they can offer all the things as we had it 20 years ago in the stock market via ordering via email, whatever. You can do all the things manually. And an institution normally does not, as I said, buy and sell within a day tons of bitcoins. They will go into the market and then they will hold it for a longer period of time. And I believe that due to the fact that now the banks, not only in Germany, but also in Asia and in other countries, are ready or more ready than they have been a year ago. And so I'm more agreeing with Sven and a little bit disagreeing as well with Philip that we have a different situation. A year ago, none of the big banks globally really had a working infrastructure. They had the test playgrounds. They worked with playgrounds.
Totally
they
agree.
even worked with real money. But I mean, even if you take the Siemens corporate bond, 60 million is a test case. That's not a real, I mean, it's real money, but it's a test case, yeah, if you talk about the global market. Yeah?
So just take that into consideration. Now, I'm not saying that there aren't going to be small or minor corrections or black swan events that drain liquidity from this market and create a significant pullback. But in my personal opinion, we are on the cusp of experiencing, if we zoom out via the long-term perspective, a hockey stick-like formation in the digital asset space and price action with a lot of these digital assets, mainly because once these institutions do dip their toes into the water and they adopt these assets and then they start to offer them to their clients, it is my firm belief that we are going to experience an upward trajectory that has never been seen in this market before. So obviously, of course, I'm not saying that there is no downside risk, but based off of what these representatives are saying and what the documents are stating, it's that the bear market cycles or the pullbacks that we're set to experience in the future digital asset space are going to be a lot less drastic than the ones that we've just recently witnessed. So just take those things into consideration. I thought that I'd play those video clips for you guys. And I see a lot of people constantly talking about how these banking institutions are going to dump their digital assets on manual retail investors. But you just heard from not only an institutional perspective, but also a digital asset custody and institutional digital asset custody perspective that that is not to be the case. So really take into consideration where you're getting your information from, do the due diligence and go watch these videos yourself so that way you're not getting distracted by the mainstream narrative and people that are fearful of losing money in this space that tell you that these banking institutions are just going to dump their holdings once they see price appreciation on manual retail investors, because that's not to be the case according to the research that I just showed you all. Here goes another global crypto landscape outlook for 2024 as we head into the new year. Shout out to the CYPRX researchers. I thought that I'd share this one with you all, mainly because it gives you a little bit of a visual surrounding where we are at in global regulation. So as you all can see this graph here, this is all that I'm going to share from this PwC major consulting firm document here. We can see a long list of jurisdictions that either have or do not have or are in the process of having clear regulatory framework. So right down here is the key, and you guys can see it mentions a green check signifies that comprehensive crypto legislations have been established. A yellow timer indicates that there is ongoing activity such as regulatory discussions, consultations, or pending implementations of crypto-related laws and regulatory frameworks. And then a red folder implies that jurisdictions have not started formulating or considering specific crypto asset legislations or regulatory frameworks. And if we just zoom out a little bit, we're looking from Japan all the way down to Uganda. The majority of the jurisdictions in this list have clear regulatory frameworks, have licenses, have travel rules, and have rules for stablecoins all across the board. The ones that don't, like Norway, Qatar, we have South Africa, Turkey, Taiwan, and Uganda, still need to catch up. And then up here, same thing. We see a vast majority of these jurisdictions have clear regulations all across the board. Yet we still have some jurisdictions like the United States, the United Kingdom, Australia, Brazil, Canada slightly, and then we have India falling behind. So there are still some global regulatory implications that need to come into fruition. But the fact that we're seeing a lot of green checks here, in my personal opinion, is extremely bullish as we head into 2024. Because these areas that are unsure or still pending regulatory frameworks are only going to turn into green checks as we move along into 2024. So be on the lookout for that. I thought that this was just a good little tiny visual. You guys can go back and you can pause. Maybe potentially some of these on the screen are your personal jurisdictions. Now, here is another document from Old Mutual unveiling our journey for transformation via wealth. Now, something that I found very interesting about this fundamental PDF is it goes on to talk about pioneering the token economy. And something that we've talked about in a previous video breakdown is that these banking institutions are targeting baby boomers' money.
Banks are coming for the boomers' money. Boomers, baby boomers, right? They own 85 to 95, arguably, percentage of the purchasing power of most economies around the world. That's not going to change for another 15 to 25 years if longevity in medicine does its thing. Okay, so the banks want their money. They don't care about most of this room's money.
They know that baby boomers own the vast majority of wealth of the globe right now, and that they are for a fact interested in this new up and emerging asset class. They want to be the ones at the forefront moving all of that wealth into digital silos, and they want to be the ones housing these digital assets or providing these digital asset services for these baby boomers. So this kind of falls in line with that, and it goes on to read, a forthcoming trend on the horizon focuses on digital asset offerings as high net worth, wealthy clients actively pursue portfolio diversification. Their interest now spans a wide spectrum of external investment solutions, particularly digital assets, from cryptocurrencies to indirect crypto investments through exchange-traded funds, or ETFs, non-fungible tokens, NFTs, metaverse-related products, and digital currencies. Clients are keen to explore it all. In this dynamic economy, the financial advisors must proactively adapt to stay relevant. So I'll highlight that right there real quick, mainly because remember what I've told you all in previous video breakdowns. These large financial institutions know that if they do not adapt digital strategies that are relevant to these new technologies, they will fall behind.
The thing you also have to realize is this: the ball's in your court. You need to either embrace it or left behind.
And that goes for each and every single one of us as Manual retail investors. The train has left the station. It is moving full force, and anybody that does not adopt these new technologies, start to invest now and understand where the future is headed, will be left behind and will be looking back, buying these digital assets for way more than they are valued at now. They must deliver comprehensive investment strategies and client experiences that offer in-depth and transparent insights into the realm of digital products. Furthermore, prioritizing the education of both clients and teams about the intricacies of these digital asset offerings is paramount. So that's absolutely massive. Smash that thumbs up button and subscribe, because this is exactly what we've been attempting to tell people and show you all for the entirety of the year 2023, that there's for a fact a massive digital transformation happening, where the wealth transfer is real, and all of the old money, all of the old infrastructure is about to migrate over to the new. Last but not least, just to show you all physical proof that these banking institutions are interested in crypto and blockchain, here is an event coming up, Future Digital Finance event in 2024, specifically in April the 2nd through the 3rd. You can see a vast majority of speakers from Bank of America, MasterCard, State Street, Citi, JP Morgan, right? Now, if we head over here, the attendees list is even more intricate. You guys can download that straight from their website, but I went ahead and did it for you. So let's take a second and just look at the massive amount of banking institutions that are going to be at this event. You can see all of the speakers. Now, if we scroll right down here, let's zoom out. You guys can see a massive list of banking institutions ranging from Bank of America to Wells Fargo. We have PNC, United Bank, Citizens, BNB Paribas, BNY Mellon, BMO, Citibank, Frost, First Commonwealth. So there is a lot of financial institutions interested in the digital asset space. Now, if you hit Command F, just to show you guys, they will be talking about crypto. Here you can see Track B, deep dive tracks advancing the ABCs, or assets, blockchain, and crypto. This will be spoken on day 2, synchronizing innovation where banking experiences meet cutting edge technologies. So they will be discussing and talking about cryptocurrencies as we head into 2024. I just wanted to show you all that physical proof that these banking institutions are interested in these topics, and they will be adopting these technologies moving forward. As always, make sure that you smash that thumbs up button and subscribe. We do appreciate the love and the support, and I will see you all in the next video breakdown.